Good morning, everybody. Welcome to the third episode of Series 3 with Grapes and Greens. Delighted today to be joined by a very special guest, one of our soon-to-be partners on the podcast, and also a great person and a great business within the fine wine industry. We're joined by Matt Small from WineFi, who work in the realm of wine investment. Matt, welcome.
Thank you. It's great to be here.
Yeah, absolutely. And we should talk before we get any further with the venue. We're currently today at South Lodge, part of the exclusive hotels collection. Very impressive place, very kind of Danny to extend his gratitude in allowing us to work in this space. So above us is the Michelin star restaurant The Past, owned by Ben Wilkinson. And yeah, just a great venue all in all. And we're currently in their cellar, a really nice, cool place. And we've been chatting a little bit about wine investment and the likes. So yeah, pleasure to be here with you, essentially. So firstly, we thought normally when Neil's hosting, we do a wine part followed by a golf part. I'm going to swip it around because you are a big avid golfer, if I'm not mistaken, aren't you?
You love my golf.
Fantastic. I mean, you're in the right place then. So my first question to you was, do you have a golf story? Do you have a specific story that you tell somebody over a bottle at the after the round, if you like?
Oh, I have a few, but one definitely springs to mind. I was playing Blackmore Golf Club, not a million miles from where we're sat at the moment. And for those that have played Blackmore, it's a heathland golf course, and we were on the 18th hole, all square in the match, and drove it into the right in the heather. And usually I'm not brave out of the heather. I'll be take my medicine and chop out.
Yeah.
But the lie looked good, and I thought the green's on here, we're going to win the match. So stood up, hit it, felt like it came right out of the middle of the bat. I was like, oh, this is going to be great, balance finish. And then I couldn't see the ball. I was looking, where the heck's this thing gone? Next thing, about 2-3 seconds later, I hear this scream. The ball had careered towards the golf club, which is like 70 degrees left. And these ladies were enjoying gin and tonics, or were enjoying gin and teas on the upstairs terrace. And then the next thing I see is the ball ricochet off the clubhouse, back onto the 18th green, 3 foot tap in for birdie. So yeah, it worked out quite well. Better to be lucky than good.
Yeah, absolutely. Oh, we've all had that, haven't we? Let's be honest. Giving a couple of scares. That's a good story. Did you, by any chance, go into the clubhouse afterwards, enjoy any wine, or?
I did, and I bought them a new fresh round of gin and tonics because I think a lot of them ended up on the floor. So
very good of you. Very good of you. Good. Well, yeah. I mean, we were talking beforehand about your connection to golf and from a relatively young age getting into it and playing around now. So really quite interesting to have you from both a wine and a golf perspective. Talking of wine, of which we should probably mention something about the wine that we're drinking. So this is a beautiful Vosges. This is from Domaine de la Vosgerie from 2008. I thought I'd bring it along as a little thank you for coming on the podcast, but also nice little taster and a wine that blends the boundaries between investment and drinkability. As we were mentioning when we opened it, very, very drinkable at the moment, but also has legs. It's got that good amount of acidity there. So yeah, really nice to crack it open with you and a pleasure as well. So cheers to that, and thank you very much for coming on.
Cheers, pleasure.
Cheers. So when we talk about wine investment, I think a good place to start is with WineFi. You're relatively new to the wine investment market, making quite a big name for yourself, winning quite a few awards as well, which is great to see. But can you tell us a little bit about, first of all, your journey into wine investment? Because if I'm not mistaken, you didn't actually start in wine investment. It's only a recent passion that's been sparked.
Sure. Luke, so yeah, previously I worked in equity trading for a Scandinavian investment bank. And I was always exposed to wine. There was always wine at the dinner table at my house. And one of my best friends became quite a successful restaurateur, and he really opened the kind of doors to fine wine and the different regions. And then just through working in the bank and different kind of social events through that, I got to try different bottles. But it wasn't really until COVID, where I think a lot of us were probably drinking a bit more than we normally would. And
sat around with nothing else to do. Yeah. And if there's wine there, you might as well open it.
Yeah, exactly. And a few hours to kill. So I started doing the W sets. And through that kind of opened my eyes to this niche little world of fine wine investment and how it would sit in a broader portfolio. And And that was the kind of the beginning. I worked for then a smaller fine wine brokerage before moving to WineFi earlier this year.
Yeah, it's an interesting journey because a lot of people who are currently in the trade have sort of built up their way. They start as a merchant rep on the floor, commonly a Majestic normally, and then they build up their way through the echelons, get into that fine wine era where either they're a buyer or they're a sales rep or somebody, and then they make that jump to fine wine investment when they start working on brokering, working on investment portfolios and analytics. So it's interesting that you actually started in a different area of business, if you like, and then moved over to wine. What initially attracted you to wine? Was it the launching your own wine journey in WSET, or was it the appeal of potentially the growing fine wine market that we've seen over the past 5-10 years?
I mean, it was a combination of, at the time, the market was obviously doing very well. The asset class has very intriguing fundamentals, which I wanted to explore more, and also the ability to kind of merge a passion with a career, and I saw that as a great opportunity.
Yeah. I mean, I always say, if you're not happy with the career that you're in because you're not passionate about it, think about moving on potentially and find something that you're really passionate about. It was a big thing for me. Was I went to go and study architecture, found it really wasn't for me, came back and went into hospitality, found my footing there, enjoyed the buzz around it, and also enjoyed the products, hence why I'm sat here now talking about wine. Really enjoy it as a commodity, as a business venture, but also at the end of the day, as something that you drink with good company and good people. So brings two industries together, I think.
Yeah, exactly that.
So then going on to WineFi itself, like I mentioned, making a bit of a storm in the industry at the moment for your approach to wine investment. Tell us a little bit about WineFi, sort of the inception journey and the journey that you guys have been on, as well as your position within it as head of investment as well.
Sure. So I became aware of WineFi, like a lot of people do, through LinkedIn, very strong LinkedIn presence, and puts a lot of kind of insight about the fine wine markets on there. And I could see that WineFi were doing things slightly differently than traditional fine wine investment. And that really resonated with me because of my background in equity trading and the different education I'd done through that. And it's really, what WineFi is the first quantitative fine wine investment platform. So what we aim to do is take advantage of what we call information asymmetries in the market. So fine wine's very traditional. Recently, people have adopted using data from their buying decisions and also to help them sell. However, our kind of ethos is, if we have the most data, the most clean data, we can use modern probability statistical models, we can use machine learning to identify wines that have the highest probability of outperforming. And we can also, and this really I found quite interesting going to fine wine, having worked in the equity markets. If you're going to buy a stock, you know what exchange it's the most liquid on.
Yeah.
While fine wine's not like that, as you know. Look, you've got an auction house at one price, you might have a merchant at another, an exchange at another price. And what we try to do is aggregate the liquidity in the market. So once we determine the wines that we believe have the best chance of outperforming, where can we buy them the cheapest?
Yeah.
And it's both of those factors that help us outperform fine wine markets over time.
Yeah, it's an interesting avenue, an interesting angle, if you like, on the fine wine market. And actually, ironically, in Series 2, we talked to a gentleman called Simon Wordsworth, who's the founder of 59 Club. So 59 Club use analytics and data points to be able to talk to clients who are predominantly golf clubs, golf membership programs and other things like that, to improve their sales and to improve their business model as a whole. And again, using that data points, using the analytics, being a little bit more finite in what you're saying and where the market's looking at, it's only ever going to help, isn't it, really? Especially in terms of wine, where, as you said quite rightly, there's so many different assets, so many nuances. Vintage to vintage is different, producer to producer is different, bottle to bottle is different at the end of the day. So having something like a structured approach to fine wine investment is a really unique take on the market, and one that not a lot of other people are doing, I suppose, as well at the moment, which is amazing. which is really cool. And as head of investment at WineFi, your position, I'm guessing, covers pretty much everything, does it?
It's fairly broad, so I work with our head of ops, Ollie, in the sourcing side. I work with Aaron, who's our head of data, and Raf, who is a PhD in nuclear physics, still insane of that in the wine world. And they build our very kind of statistically driven models and use very, very clever tech to kind of spot patterns in the wine world that we maybe weren't aware of before. And then I have the pleasure of working with all our clients as well, reviewing their portfolios, helping them invest or grow their portfolios, and talking to new investors.
Yeah, absolutely. And I suppose we should, before we dive even further into wine investment, sort of take a step back and think about wine investment on the whole. A growing industry at the moment in the world. It's been the top talk of the town in various articles by lots of big wine merchants, not just nationally, but globally as well. I think it's taking on a new life, if you like. And we're starting to see that being replicated in all of the fine wine houses across the world, people like in Bordeaux or in Burgundy, in Tuscany even. And the slight shift in attention to fine wine investment, it's definitely seen a lot of growth within the last 5 to 10 years. In terms of how the market works though, because it can seem quite a daunting process to understand the fine wine market and the tradable market, but also to get involved, right? So when we talk about getting involved in the fine wine market, where does it really start? Does it start with a question? Does it start with an ambition to get involved? Or what have you seen as the biggest starting point for people?
So different people come into fine wine investing from kind of different paths. You'll have people who have a passion for fine wine, and then they want to grow that into connecting the passion with investing. Or we'll have people who maybe don't even drink alcohol, but they see the unique characteristics of fine wine and they can see how that can add diversification to their portfolio. They like the CGT exempt benefits, which most UK investors enjoy, and the kind of long-term value growth that we've seen in fine wine prices over a 10-year period.
Yeah, no, it's proven itself to be quite an asset that's well worth investing in, if you like. I've come across numerous people who have both gone, when I asked, do you know anything about fine wine investing? They go, no, but I'd love to get into it and I'd love to explore the realm. And then people who I ask and they go, yeah, absolutely, I've been in it for 5 years. Why would you not, right? I mean, it's a valid point, I suppose. Yeah. It's a valid point. And WineFi as an investment platform, an investment firm, you not only deal in the investment of tradable commodities, but also you do a little bit in broking as well, which differs slightly from investment, whereby you're focusing on your data points and your assets, like you said at the start, to find the best wines at the moment, the quote-unquote best wines, for the best prices, as you said, because it's such a diverse marketplace, if you like.
Sure. So there's so many ways you can buy fine wine. For example, on exchange, so you have a number of main fine wine exchanges now. So for us to take advantage of them, we connect via APIs, and then we get a live feed or nearly live feed of all the bids and offers that's trading at any one time. So for example, if we are looking for a particular wine and we see a really attractive offer that just flags up in the market, then we're notified of it so we can take advantage. But also on the sell side, we track the wines that our clients hold, and if there's a random bid, because a lot of these exchanges are also B2C, right? So they may not be seasoned investors, they may put bids up that are maybe a little bit higher than the market, but we also want to take advantage of those for our clients, and we'll flag those as potential sales to our clients as well. So that's the exchange side. Then the auction side as well, we're going through the lists. We basically scan. We have this tool where we can scan large lists, apply our probability algorithms, and identify very quickly which wines we believe from a probability standpoint will outperform. We then do our own qualitative checks, like we were talking earlier. I really liked quite old white Burgundy, but those tend to have pre-mox issues, so we do a qualitative lens as well, just to make sure. Or another example was the Chateau Reyas's owner, our chief winemaker, recently sadly passed away, and there was a spike in the price, which completely confused the model. So we checked for kind of other factors outside of, say, the 30 variables that we look at in the model. And then once we've identified those wines, that's when we can tap into the exchanges or the auction houses, or, for example, we get a lot of emails from merchants, which we can then price scrape, link to a SKU. We use the LiveX Elwyn number, and then connect that into our liquidity pool of wine. So really what we're trying to do is how I would have traded in equities. If I wanted to buy a stock, I'd know where to go, where it's most liquid. We're trying to do the same with fine wine, just aggregate liquidity so we can get the wines at the best prices.
Yeah, it's a lot like a stock market, isn't it? In terms of the way that you guys are doing it is very much data analytics, focusing on it and focusing on in the moment, what is the most valuable, what is the best price, and what is potentially going to yield you the most reward from an investment perspective. And yeah, again, a unique take on the market, a unique aspect which we haven't seen really too much from other people. A lot of other people are still adopting the traditional way of fine wine investment, which is somewhat, some would say, based on personal tasting profiles, because they have influence in the industry. Others would say it's completely based on the science. The fact is that in 5 years' time, a wine that was from 2008 will be better than it will be now, from Burgundy, for example. And so it's sort of teetering in between both of those lines and finding a niche aspect point, which for you guys is the data points, which is fantastic, and obviously does give you a great edge in the market, a unique standing point, and with new people coming into investment who are looking at it from a far more reward aspect than what it potentially was, which maybe a lot of people saw it as a collectible. And fine wine investment was something nice that was on the side that they had a little bit of disposable income to be able to put towards. Now it's becoming a more focused asset in the market, if you like, a more focused commodity, which is really exciting. So in terms of how it's currently sat, the market in the moment, we've got a lot of reports coming back and forth. Talked earlier about white Burgundy, Champagne, Tuscan wines, Bordeaux, Burgundy, and so many other different points at the moment as well. I was wondering specifically if you had seen over the last couple of weeks, 3 weeks maybe, any shifts in the market. For anybody out there who might be listening, might already be invested and want to get a little bit of a cheeky insight, but also for those who can start to understand how wine investment works and following market trends.
Sure. I think it's important to highlight fine wine went through a bit of basically a bubble during COVID, driven by a number of different factors. Some of them were all at home drinking a lot more than we normally would have been. A cohort of individuals had more disposable income, and also central banks were printing money. So increasing the M3 money supply increases fixed assets like wine. And we saw prices skyrocket between 2021 to mid-2022. Burgundy was up maybe 60% in that period. Champagne around 50%. This is going off the LiveX indices. And we talk a lot about fine wine as a good diversifier in a portfolio, and it's very low, what we call a rolling correlation coefficient to traditional assets like equities, the S&P 500, bonds, real estate, for example. But it doesn't exist in a macro vacuum. So to curb the kind of inflation caused in COVID, central banks increased interest rates. And increasing interest rates is not good for fine wine because it's a non-yielding asset, right? So when real interest rates are high, people tend to asset allocate out of fine wine. And then you started seeing people take profits. So the market sold off. And the interesting thing as well is a large supply then came onto the market. And that was because merchants were sitting on a lot more stock than they historically would have. Basically since 2013 to the COVID boom, 2020, the merchants were having this stock as an asset in their balance sheet going up in value.
Yeah.
And they were obviously happy with that.
Yeah.
But whenever the prices started to come down, we started to see a lot more supply in the market. And And we've been working through that supply basically until, I would say, end of summer last year.
Wow.
Where we started to see the market stabilize. Yeah. We look at a number of different things to track this. So we track how the list prices change. So for example, if merchant sell prices are continually going down across the board, that means there's more supply coming onto the market because they want to cut rates to get rid of the stock. But we're seeing those stabilize, if anything, increase slightly. We're seeing more bids come to the market on the exchanges. So we look at a thing called the bid offer spread, which is a stat the LiveX provide us, total value bids, total offers. We want more bids, right? Because that's more of a buy intent from the market. So we've been seeing that continually increase now since the end of the summer. And you asked there what wines are good then. Well, we're looking at those historically very powerful brand power producers that have come down quite a lot from their high prices. Yeah. Some maybe even lower than what they were pre-COVID. Have historically strong track records.
Right.
Relative value. So when we say relative value, we're looking, okay, for example, DRC is a good example here. On average, DRC is down 30% from its high price, or 34% across all the Grand Crus. Massive name in the market. Another important thing, very, very good secondary market liquidity.
Yeah, absolutely.
So you can buy and sell reasonably easy on both the entry and the exit. And these are wines that people really, really love. You ask the majority of sommeliers or people who really, really love fine wine, what wine is it that you would, like, you're kind of died and gone to heaven wine? Yeah. Most people say DRC, right? It has that global appeal. And like you mentioned earlier, ageability, right?
Yeah.
So 30-year plus drinking windows in a lot of cases. So it'd be those types of wines. Now, I know DRC, quite a high entry point. That is actually one of the reasons why we also have our syndicate model.
Yes.
Where you allow people access to a large portfolio of wine for a fraction of the entry point. It just so happens our current one is DRC. But it's because these are the wines that are set to outperform the most when the market goes back into bull run now. And from a market timing perspective, those are the types of wines you want to own.
Yeah, no, I completely agree. And you touched there on the syndicate aspect of your business, of a new angle that you're taking again on fine wine investment, which is co-investment, if you like. Recognizing that in the modern world, you've got to open up the opportunity to everybody because it is a growing market and you don't want it to be saturated by all the big players who own all of the big wines in asset form, if you like. And that opportunity to co-invest is not something that we've seen before. That's done more publicly rather than privately within little friendship groups, if you like. And it's a unique take, and one of the reasons that we were drawn to you guys is that opportunity for everybody to get involved in fine wine investment and trying to break down barriers on people who are thinking that it's a very niche, very private, potentially very exclusive and privileged area of the market to access, and giving people those opportunities not only to invest in the wine, reap rewards of it, but then potentially at the end of the day sit down with a bottle that does cost north of £100-200, and having that opportunity to then share it with people and the investment opportunities going forward is a really really honourable thing to do, and opening it up to a wider market, which is great as well.
Sure. Well, that was the main aim with the syndicate, was to give people kind of an entry into fine wine, because you're getting exposure to a large diversified portfolio at a fraction of that price. But we also provide all our investors with a portal, so you get to track all the wine's performance in real time, get familiar with the market, and try and just bring the whole thing to life without someone having to spend tens of thousands to build a wine portfolio.
Yeah, I mean, you're quite interactive in the way that you do wine investment, if you like. You host webinars. You said on the second or third day of your of your role there, you sat down in front of a camera and recorded a piece to camera. And it's all about that visibility and getting people clued onto it first, people seeing the faces behind the names that are pioneering this new age of wine investment. And again, it comes back to, we talk about this a lot in golf as well, it's experience and it's knowledge as well, sharing that knowledge to a wealth of people so they all have the same opportunities open to them as everybody else, and leveling that playing field potentially, which is fantastic. So a lot of people might be listening to this thinking, I really want to get involved. I want to sit down, potentially book a call with you guys and talk through what I can look at from an investment portfolio standpoint. But a lot of questions and queries get raised around the risks, the concerns associated with fine wine investment, because at the end of the day, you're putting your money in some liquid which is in a bottle. So for some people, there's always that thought of, but what if it goes off? What if it gets corked? What if it's a fraudulent bottle, which we've seen quite a lot of in the last 10 years, and it's a growing concern within the market. How do you guys manage that risk, that aspect of, actually, you're right, at the end of the day, it is a completely consumable product, it can perish, and it's such a fluctuating part of a market, part of an asset trading market, whereby 1 year it might be great, 1 year it might see a rise in price, the next year it might dip in price. And I think that's a lot what's happened with champagne recently as well, is it saw a massive boost and then kind of dropped off, and only now are we seeing it potentially crawling its way back up.
Sure. So you touched on two really good points there, and I think the first one is provenance. So we deal with provenance in 4 different ways. First off, we only buy wines that have been stored in bond. So we have an audit trail, how they've been stored and where they've been stored. Also, part of the bonded storage system is we store ours at coterie vaults, but we buy from other bonded warehouses where they temperature control, humidity control, light control, to ensure those wines are in the best condition to age over time. Then when it comes to buying, we only buy from trusted merchants. So for example, the LiveX Exchange, from auction houses that we trust, where we will do provenance checks, and merchants that we trust. Then we also get photos of all the wines we buy, just to make sure the levels look good before we buy them. And then whenever they get transported to our vaults in coterie, we again open them up, make sure they are exactly what they're meant to be from a kind of authentication standpoint, but also a provenance standpoint. So we check the levels again, and also to make sure the wines are exactly what we bought. Right?
Yeah.
So there's no
first and foremost, right?
There's no mix up there as well. So those are the main ways we try to we maintain provenance and authentication. And then the other point was
risk in terms of fluctuating marketplaces, but also working with the time aspect of wine.
Sure.
I suppose.
So there's a number of ways we do that. First off, in both our syndicates, or if an individual wanted to build a bespoke portfolio with us, we've a minimum requirement, and that's to build enough diversification across the portfolio to manage the risks. So everything we do is based on probability, and we have some quite interesting charts that show if you basically every potential outcome that could happen if you invested in all the wines in our universe. And ultimately there may be a couple that underperform, but you hedge that with building a diverse portfolio against that. And then investment age, we typically don't get involved in the primary market, mainly because recently released prices have been not in line with the secondary market. So if I can buy a secondary market wine of equal quality with a few years storage and insurance paid in, cheaper than a primary market release, well, from an investment standpoint, it makes sense to stick to the secondary market. And then we have tracked the performance across all regions when the optimum time to buy a bottle of wine is. And it's very in line with its drinking window. So, for example, a Bordeaux, it may take 6-7 years from when it's physical to enter its drinking window. That's when we'll be looking to buy it. And then we aim to exit all wines roughly 5 years before the end of the drinking window. So that's kind of the optimum investment period.
Yeah, interesting. Very, very cool. And again, data-led, which is completely different.
Yeah, exactly.
I think it fills a lot of people with a lot more confidence, especially people going into this as a new industry, a new investment opportunity, for people who are keen in that kind of aspect of their business, having that reassurance that everything is cross-checked to the nth degree with data, and you're being guided by top analysts in the field like yourself, and the rest of the guys at WineFi who do a fantastic job of making sure that transparency is key. Everything that you need to know about a wine is there, and like I said, that guidance process, keeping people confident, keeping people involved, keeping people engaged, and at the end of the day, keeping it interesting and exciting. It's a forever moving field. It will continue to be a forever moving field, I feel, and one that I think won't necessarily depreciate with time, I hope. It's already up there with the likes of spirits, gold, jewellery, automobiles and the likes, an association of luxury, an association of fine commodities, and it sits nicely in that field, I feel. It's a very comfortable field for it to sit in, which is great. So moving on to a couple of our last questions. You have your own investment portfolio. In terms of how that's structured, you mentioned earlier that you're actually moving potentially as a personal point away from Bordeaux to do with the contents that are coming out at the moment in your age, but also exciting opportunities away from Bordeaux as well. Because I know certainly when I started getting involved in investment, getting involved in fine wine and wine itself, Bordeaux's that number one, the exclusivity, the 5 first growths are the gold, essentially. But there's so many other opportunities out there. You mentioned quite a lot in Super Tuscans, which is a growing area of the market, has been for about 15 years now, and one that's really actually paying off quite nicely at the moment. And so I was wondering if you could talk us through sort of what's necessarily driving the Super Tuscan trend.
So this is more my opinion, but Super Tuscans, I think, market themselves better to a younger audience. They're more approachable. From a price point, maybe outside of Macedo, they're still cheaper than Bordeaux First Growths, for example, although very, very similar styles wine, well, similar grapes anyway. And when we look at them from a portfolio perspective, they're fairly liquid. They fit a really nice point in a portfolio, which Bordeaux used to. However, Bordeaux since 2013, the returns have been lackluster. Now, I'm not writing off all Bordeaux. Are of course fantastic investment opportunities in Bordeaux. We particularly like older right bank wines, so Le Pin, Petrus, produced in very, very low quantities. Older vintages, say pre-2010, where their secondary market price is a lot more established, but also it's becoming a lot more scarce in the market.
Of course.
And they're really hitting their stride when it comes to drinking windows. So on a 5-year investment horizon, we do quite like those right bank older Bordeaux.
A lot of it comes down to the younger age of people coming into the investment space and coming into the drinking space as well. It's gladly one thing that we have seen throughout the past 5 years is, although wine has taken a dip in terms of interest, education, investment, it's starting to pick up now. Younger people are starting to get more involved in it. They might be drinking less, but they're drinking better, and that is only going to help us move forward with this investment journey, and also within fine wine, if you like, as well. It's really interesting. So one more question before we wrap up. We always ask people if they're a fan of golf and obviously of wine, where they'd like to go and play their last round of golf, and who would it be with. But seeing as we're drinking some wine and we need to change it up a little bit, I'd like to ask you if you could have one more bottle of wine with 3 others just off a golf course potentially, what would it be, who would you invite, and most importantly, where would you have it?
Very good question. I think it would have to be the 2008 Lys Collin Les Perrier, because that was that bottle of wine that I had, like, when you try it, it's the light bulb moment. You're like, oh, I get it now. This is what this is what wine's about. Yeah. And I shared that with a very good friend of mine, Ben, who I mentioned earlier. He's a kind of restaurateur who got me into fine wine. I would have to have my dad there. He the older he gets and the more I've got into wine, he's taken more of an interest. So that's a really cool thing. I've been able to share with him. And then if we're linking it to golf, I think Rory McIlroy will definitely have to be there. I know he enjoys a nice glass of white wine after Shane Lowry went and bought him a case of Lafite after the Masters. And then speaking of the Masters, I think a nice terrace in Augusta National somewhere would be a great place to drink with those guys.
Painting a good picture there. Painting a very good picture. Matt, it's been an absolute pleasure. Thank you very much for coming on, for speaking to us, and really looking forward to the next couple of years going ahead. I've got some exciting stuff lined up and an opportunity hopefully for a lot more people to get involved into the space, and for you guys to read more about what you do, how you do it, and help everybody out, because fine wine as an investment, it's not an easy field, but it's one that I think we should definitely encourage getting into. So thank you very much, Matt. Pleasure as always.
Cheers. Thank you.